Well, happy Sunday, YouTube. Um, Stock review. These are some basic micro analysis of some agriculture ETFs, and definitely more detail into the real estate. You can go back to the previous video, click the link. It'll bring you all the updates that's on that report there, along with DHL, global macronomics, different articles, just expansion and a few corrections on what I had last time. And continue, you can save the link and continue to access this research as it goes along. I'll be expanding on all the asset classes, and I might stop myself in my tracks about, I would say, 7 hours into the research today, which is the 16th. I hit full brakes because I don't have any compare and contrast. As far as what I can compare my findings with, so I hit the brakes and went straight to the beige book, and the telltale sign of really what's going on. The president and the Fed are not on the same page. I don't know who's saying that. If you look at the beige book, everything's moderate, slow, steady. These are the narratives. These are the descriptive words that if you read the overall summary of the economy on the beige book, these are the descriptive words they're using. So as far as what the executive branch is saying isn't true, that things are booming and blah blah blah. In some districts like Boston, they got shortages. And I directly remember yesterday when I was talking about foreign direct investment and empty shelves. Well, that's sort of kind of where it's occurring. Will that expand into the rest of the country? I don't know. I couldn't predict that. What I can tell you is where I live, Dallas-Fort Worth, the economy did grow. It is doing okay, but maybe that's because Lockheed Martin is right down the street and they got $300 billion from the government for the F-35, and Boeing's right around the corner as well. Could be one of the key reasons, I think. So I'm gonna take a turn, deal with some beige book issues to get a little compare and contrast, jump back into agriculture. Because in order for me to do a summary on agriculture, I gotta know what the projections are, which at this point I don't know. I did skim over it and things were steady. In some areas it was slow due to trade issues. That's what it said. So also I glanced over construction, and in a lot of districts things were slow. Some districts things were well. I'll have to go through the full beige book and add that to the report, what I'm finding. And I don't think the overall summary in the beige book is really a telltale sign. I'll have to go through each district and compare what they're talking about. Definitely, it's going to take a few hours to do that and actually send a comprehensive report on that. So overall, work done today was pretty productive. Yeah, sort of ass backwards. but at least you'll be able to step into my thinking and how I work. I don't really have a linear planning process when I do. And I mean, this you would call this microanalysis. No, it's more strategic at this point. So it's more overall market analysis. But it's real funny when you do market analysis. You can't really do a market analysis without doing a detailed microanalysis or all these words in investing. I'm thinking of the word. You know what I'm thinking of. Help me in my comments. Sorry about that. It's open. Yeah, I'm just messing around. This analysis of different stocks, different ETFs. I'm sorry, the word is far displaced from me at this point. I got so many new terms to learn as far as benchmarks concerning REITs. And definitely some of the REITs I speak about are trust-based. Some of them are ETF-based. Well, all of them are ETFs, trust ETFs, blah, blah, blah. But there's some big acronyms I'm not familiar with. I'm going to really have to do some research on that. And I want to get all this done. That way we can get to the MACD and the KDJ and field some of these trade ideas. That's the fun part. This is the hard part. Hard part is selecting your players. Fun part's putting them on the field, see how they perform. So through big market analysis, micro-analysis, we'll figure out who our players are. I can tell you coming up the next week, I don't know when I'm going to get to it, I'm going to separate construction and real estate. Well, really, they're the same thing, or are they? When you got the DOD releasing several million, I think $1 billion to build a wall. It's a government project what used to be done by the Army Corps of Engineers, probably be subbed out, and it'll probably cause commercial construction to go through the roof. I'm going to separate that for 2020, maybe 2021. I'll recombine those markets, those asset classes. But at this point, in my mind, they're two separate things. If the government wants to subsidize construction to that level. And another thing, annual capital appears to be through the drill down on the benchmark, a government agency posing as a private REIT. In the drill down, if you read it, the yields, the dividends are higher than the actual, what the dividends are higher than the yields. The dividends, the percentage is higher than the, what you would call profits of the company. Or telltale sign that Uncle Sam's pumping money into that. So, and it performs exceptionally well during times of stimulus. There's a video on there, by the way, by someone that probably knows and doesn't want to say. But it's a source video right by the ticker, the benchmark. You can read a little bit about what Webull says about it. Hello? And there's a 15-minute video on there about what a professional investor, all of his analysis on it. from his analysis, from what I read, definitely that RET is, I'm not going to say definitely, but I'm pretty sure that it's a government front. I have not read any RETs, and I've read quite a few of them in selecting the ones I want to trade. The word agency anywhere in the description of the ETF. Also, there was another descriptive word there, mortgage-backed securities. To me, that says FDIC all in it. So the video, the commentary was mixed, positive, negative. But at the end of the day, if that ETF fails, the government will bail you out. I think that's a pretty secure investment, along with the dividends. Reinvesting dividends in annually capital gives you a nice, pretty little investment, even though your principal, the word I'm looking for, if you don't reinvest your dividends, will get ate up. In good times, will do well. In bad times are shorter than good times at this point. So at the end of the day, I'll publish this, go back to the previous video, I think it was the 15th, hit the link, enjoy the research, and look for more, save that link. This is John Williams with Stock Review. Thank you for tuning in.